Hi, everybody. Welcome to Logical Investing with Subhendu. Thank you for being there on the channel. I really appreciate it. Today, we are going to talk about something which is very close to my heart. Um, we have all used polythenes, to carry things from the shops to our homes. I have always felt that if there is a way in which we could stop using polythenes, then it would be so much better, right? Um, we keep listening to stories about polythenes getting stuck in the making the floor of the ocean dirty, making it all sometimes the cows and all of these animals, when they keep grazing here and there, they keep eating the food which is there in the polythenes, and then polythene gets stuck in their stomach. It creates a lot of it's not good for the environment. We all know that. Having said that, because polythene is not good, paper bags are really coming up in demand. We are seeing a lot of increased usage of paper in the overall industry, right? And thanks to all of us, and this habit is absolutely going to get better. Sometimes it will be mandated by certain states, as they have already done that. Sometimes we ourselves will be tempted to not use some of these polythenes and things like that. So we are now today going to talk about one company which is into manufacturing of all of these paper bags, paper related, um, objects or things. We will take a look at that, and we will analyze the company called Nath Industries today. And then what is it that they are doing? What is it that they're doing special? Why should we be looking at that company when there are so many other paper manufacturing companies which are out there? And we will take a look at all of that. But before we get started with the video, just wanted to tell all of you guys that I'm not an investment advisor. Please do not take any of the stocks which I discuss about in this channel as investment advice. Please take it to understand the sector, to understand whether that is an area, that is a sector which can be of interest to you. If it is of interest, if you feel that it is sounding interesting, then absolutely go forward. Take a look at some of the other organizations, other companies which are out there. Speak to your investment advisor. Do your own due diligence, right? And then only you should take a buying decision, because these are stock markets. Stocks can go up and then down. And I am a newbie myself. I am starting this channel. I am creating some of these videos just for us to understand and discuss some of these ideas in more detail. That's the intent of the video. Please ensure that you do not construe any of the stocks we discuss as recommendations, because I'm not authorized to do any such, and I do not, as legally as well as personally, I do not think that that should be the way to move forward. Okay, having said that, let us try to understand the overall market space. Now, if we look at it, I was just going through an article here, which says that what is the overall market segmentation, whether it is going to grow up. The total annual consumption of paper in 2019 was 18.5 million tons. Right, India's population was 136 crore. Per capita consumption is about 14 kg of paper. By 2025, India's expected population would be about 144 crores. This means per capita consumption is likely to increase to 17 kg. The Indian paper and paper markets have been segmented into raw material, application, and region. Let's look at them one by one. We are not going to go into details, but just wanted to tell you that the paper industry looks at three different sources. First source is the major source is recycled or waste paper based. So this is where 70% of the paper comes from. Then non-wood agro residue based, then wood based. Now, if you there are multiple reports which are available. I'm not going to go through details of some of these reports. It says that based on application of products, Indian paper industry can be classified into four categories. One is the other, of course: the newsprint, writing or printing paper, packaging or paperboard. Now, packaging or paperboard, if you see, 55.5, 55%. That's more than half of the entire paper requirements of the country is on packaging paper or boards. Now, you might say that not all of them are being used by by retail consumers like us. Most of them also have industrial applications. When they are used as fillers between the two objects, so that the objects are transported safely. A lot of stuff happens. Then you have writing and printing paper, which is about 35%. Newsprint is about 6%. Not surprisingly, because our dependency, or on an average Indian's dependency on newspapers are slowly reducing. I would not say that they have reduced, but overall it is overall reducing. So this has been the overall kind of paper consumption within the country. There are a lot of other details as well. We will not look into that. We will straight away jump into the company Nath Industries. Now, let's before we go further, we wanted to just go and see that what is Nath Industries doing, right? Why is this company you know um, so interesting? I mean, why did I find it interesting? I found it interesting for two, three reasons. One is, they are not just a paper company. They have a paper division, they have a chemical division, and they also have they look at this. They also are trying to see how can we get into building industrial parks and so on. So have a look at this. On their website, they says that from biotechnology to hybrid seeds and food park, from value-added paper to industrial chemicals, Nath Industries' activities are diverse and challenging. Now, just understand this point. So, there is a company which is trying to be a conglomerate. They have knowledge, or most of the revenue comes from some one particular region, or one particular industry, which is paper, and then they are basically trying out for diversifying further as well, which is good, because then de-risks the overall business model. Now, let's see what are our industries. So overall, there are three kind of entities, if we are if we understand it right. There is one Rama paper, there is one Tapovan paper and board, then there is Nath Chemicals. Now, if you look at it, Rama paper is thriving paper mill known for its quality standards and consumer friendly approach. Nath paper is a large producer of eco-friendly value-added papers and boards with a capacity in excess of 50,000 tons per annum. Nath Chemicals is state-of-art modern plant, capacity of 120,000 tons per annum for sulfuric acid, oleum sulfur trioxide, chlorosulfonic acid, sulfur dioxide, and LABSA. Okay, now I'm not getting into details of all of this. Just wanted to let you know that chemicals definitely are are an important component of creating paper, and also not all of these chemicals go there. Um, Chemicals are being used by multiple industries, and Nath Industries are sharing or passing on some of these products to those industries as well. Now, if we look at the kind of products, we see craft for grocery bags, we see edge protector angel books. This is what I was talking about, wherein the edge protectors are widely used in the packing of various finished goods such as electronics or glassware, FMCG, export packaging, and so on. Now, if we look at, and these are the chemicals from the Nath Chemicals, from thionyl chloride, pharmaceuticals, dye intermediates, pigments, agro. So these are some of the overall categories. If you go and look at all the other products, then we will get a fair, good amount of understanding that they are into absorbent, saturating craft paper, laminated sheets, which is used in all of our constructions at homes, MG white tissue sheets. We have multi-layer carbonizing, color tissue, craft grocery bags. Then these are coated one side, DTY tubes. So there have, if you see, this is LABSA, which is the storage containers. So what I wanted to say was, overall, their product portfolio is quite diverse. From that angle, we are sorted. Now let's go and look at Nath Industries as a company. What about their fundamentals? So if you look at it, it's a small cap company. It's 154 crores market cap. And then if you look at the PEG ratio, which should be between 0 and 1, mostly good companies have that between 0 and 1. We have it at 0.17, which is very good. The Altman Z score, which normally is greater than 3, has it as 3.1, which is again good. We have the stock PE, which is at 7.85. The industry PE stands at about 13. So, overall, there is room for growth. If we will look at the other factors, how can this be increased? But we will do it that. Promoter stakeholding. Promoter stakeholding stands about 73.8%, which is fairly high. And then if you look at the change in promoter holding over the last 3 years, 49.5%. Now, this is because there was an amalgamation with there was an amalgamation some time back with Rama Paper, and because of that, the promoter shareholding has improved. If you scroll down to the bottom where we have the promoter stakeholding, so promoters holding was at 24.26, and then it has increased to 73.74. General public has, overall in there also there have been a lot of Adesh Ventures, Tapovan firms, Mayo firms, all of them have, these kind of percentages. Overall, with retail investors, the share is quite low. Now let's go back. Let's go back and start looking at, the overall book value. If you look at the book value, the company's book value stands at 124. The current price is at 81. Even if we just, think that the current price, what is the, gap which the current price has to fill before it reaches even its book value, because it's largely undervalued. I see, almost 50% kind of a growth in here. If you look at the reserves are at 217 crores. The market capitalization is at 154 crores, quite less than the overall reserves in the company as well. So overall, the share is a face value 10 share. It doesn't matter really because the dividend yield is 0. The company is not paying out a dividend, which is okay, just fine. Debt to equity is really low. It's at 0.15, which is good. Earnings per share is 10.3. If we go to the price charts, right, in 1 year, let's look at the 1 year charts. The 1 year charts, probably it was the stock was trading at about 85 a year back in January, 1st of January last year, and it's trading at the same price. It's almost 81. So it's at the same level. If you look at the 3-year price horizon, again, so it was trading at 81.15 in January 19, and it's trading at 81 in December 21. If you look at a 5-year chart, you see that the stock has gone up significantly from 17.65 to 81 today. Now, if you look at the kind of earnings which the company has had over the last 5 years, you see that there has been dips as well, but if you see, largely the earnings have been on the increase, right? When the earnings have been on the increase and the price has remained almost constant, we know that, there might be, so you see there was an amalgamation with another company. So the market normally observes how does that pan out, because these are two different companies, even though Rama Paper and the Nath Paper are, similar in their operations and all of that. The way every company works is different. So when the amalgamation happens, market normally waits to observe how it would all pan out. I think somewhere around this time frame, at around 25 levels was when the amalgamation had happened, and post that, the company, the stock price has absolutely appreciated, and it is kind of showing a slight upward trend, but we'll have to wait and watch. These are and right now, if you see, this is trading at less than the 200-day and the 50-day moving average as well. Overall, with an increase in earnings, when the price has kind of fallen, I normally keen on these kind of stocks to buy and hold for a long term, and wait for them to get back to their peak levels from where they have fallen. Anyway, so if you look at it, the company has reduced the debt. Stock is trading at less than its book value. Company is expected to give a good quarter, has delivered good profit growth, over 45% CAGR over the last 5 years, which are good things. Low return on equity, 8.12% for the last 3 years. This is okay, on the slightly lower side, but okay, because it's a smaller cap share. We would probably have to start looking at some of the annual report. In the annual report, what is it that being said? So the companies generated repeated profits, not paying out dividend, which is again okay. Growth companies need not pay dividends at all. If we look at some of these peers, the overall industry, we know this is trading below industry PE, but if you look at all of the other companies, they are all trading above Nath Industries. In terms of if we come down, if we start looking at the quarterly sales numbers from 32 in December 2018, 41, 29, 30, 71, 75, and there's a sudden major dip here, and then it has again gone up. So 105 in June 2021 and 96 in September 2021. If we start looking at the yearly numbers in terms of sales, so sales has grown from 50 crores in March 2010 to 283 crores in March 2021, and as of now the revenue stands at about 388, which is fairly high and which is good for the company. The overall operating profit margin also, if you see, that has consistently been at 5, 6%, 7%. That has also gone up to about 11% now. The net profit, absolutely, they are doing good. Last year, March 2021, they didn't do so well, but then now they are back on track in terms of the consumption and also the overall net profit. Earnings per share is absolutely increasing. So if we look at all of this, and today, if we look at the quarterly earnings, also continue to hover around the same number. I think the annual P shows a much better picture. The annual EPS shows a much better picture. Okay, so having looked at that, now if you see, the share capital has also been increasing. The reserves have been increasing. Even in last year, the reserves have increased from 194 crores to 211. Now it is at 217 crores. Borrowings, if you see, borrowings had consistently grown till last year, but then in March 2021, borrowings have reduced, and in September 2021, borrowings have even further reduced. So, and then we start looking at the fixed assets. Fixed assets have almost been at the same 205, 202, 203. Overall, cash from operating activities, if you see, that the company has been generating positive cash from operating activities since the last many years. In fact, last 7, 8 years, and then that has been growing. And you see, net cash flow is also now significantly higher. Now, looking at the debtor days, if you see, the ROCE is, let's look at the debtor days. The debtor days has, increased marginally. It has increased. Inventory days has also increased. These are not good. Days payable at 55. This has also increased. ROCE has gone down. Working capital days has also increased. So overall, these ratios do not, sound really positive. But however, as an investor, I would want to probably wait for some more time to see how this pans out. And then, as we saw, the shareholding pattern, we had seen that overall promoters are holding a huge amount of shares. Now, let's go back. I was starting to look at the annual report, which compared the data from last year and this year, and also tried to look at the, feedback from the director of the organization. So there is a comparison between 2020 March to 2021 March. The total income was almost the same. It had dipped actually, but profit before interest and depreciation, if you see, that had increased. So that basically means that the operating, as we saw in the previous sheet, that the overall profit margins, the operating profit margins, continue to increase, right? And profit before tax, if you see, profit before tax also is higher than the profit before tax of the previous year. Now, as discussed earlier also, the review of operations, companies operating into paper and industrial chemicals, we saw that. Now here is what is important. Despite a marginal fall in the turnover and adverse situation, the profit before tax increased from 1874 lakhs to 2165 lakhs, thereby reporting increase in profit by 15% on year-on-year basis. Now, the overall paper industry in general and writing was severely affected last year because of online teaching, adoption of work from home culture. Despite a lot of 2 months of production due to pandemic, paper could maintain turnover of 21,300 lakhs against the turnover of 21,051 lakhs recorded in the previous year. So they talk about all of these details, and then it all boils down to one thing, that the overall demand for specialized paper is increasing. And because of that, we would see that the overall trend of increasing revenues and increased operating profit margins, they will help Nath Industries to get a higher returns or higher profit margins as well. Now, I there was one other area which I wanted to also focus on. Which we said that where is it that Nath paper is? How is it that Nath paper is performing? The performance of unit has been satisfactory despite various economic and industry challenges. During the year, even after a loss of production for 2 months due to pandemic, unit has improved its turnover. Now, just wanted to bring to focus one other thing. Now, if the company operates for all the 12 months, operates at the same pace to increase its revenue, operates at the same pace to increase its overall profit, um, I am confident that the company will definitely do well. Now, so this is where we are now. This is an interesting, piece of document which talks about the rating rationale. The overall Rama Papers, Pulp and Papers Limited, we looked at Screener, and then in Screener, if you go here and you see the rating update, you would see that for Nath Industries, um, the long-term and short-term rating has been reaffirmed to be at stable. Crisil has given this rating. This one talks clearly about the overall the things which are happening in the industry. The overall business performance have improved since the second half of fiscal 21, following easing of pandemic-related restrictions and revival in demand. So this is what is the core thing which is helping. The revival in business performance has carried on to the current fiscal, with Nath recording highest ever quarterly revenue of 105 crore in quarter 1 fiscal 21, despite temporary slowdown in activity. Right. And then the financial risk profile expected to improve with higher scale of operations, leading to higher cash accruals. Debt protection metrics like interest coverage ratio to improve 12.5 times compared to 9.4 times last year. This year it would be 12.5 times. So overall, the ratings continue to reflect Nath's diversified revenue profile, long-standing market presence, and adequate financial risk profile. And then it talks about its strength. What is the strength? Let's talk about three key strengths. Diversified revenue profile, we talked about it. It has 70, a major portion of the revenue coming from paper, and some amount of revenue coming from the chemical space. So, long-standing market presence. The company has been a leading position in certain niche segments and long-standing client relationships. It's a leader in tube-grade paper and thermal paper used in ATM slips, and is one of the few players in absorbent paper segment. In chemical business, it has established market position in sulfur dioxide, sulfuric acid, and oleum, besides customer relationships of over 2 decades. Adequate financial risk profile. The financial risk profile should remain adequate over the medium term. Net worth increased to 230 crores from 213 crores in March 2020. So, and debt, out of the total debt of 57 crores, interest-free sales tax loans from government amount to 36 crores. So that is all interest-free, right? Balance debt is primarily in form of working capital. So overall, company looks good till here. What is the overall weakness? Exposure to volatility in input prices, part vulnerability to demand cyclicality. Sorry for that tongue twister. In the paper segment, the company derives sizable revenues from laminate grade papers used in the real estate industry. Now, cyclicality in the end users industry will impact the demand potential during downturns. So that is another vulnerability. Liquidity adequate. Cash accrual is expected to be around. Absolutely, whenever there is a company which is operating, liquidity is absolute must. And but Overall, the outlook is stable because Crystal Ratings believe Nath will continue to benefit from a diversified product profile and established market position, increasing scale of operations, and operational synergies derived from merged entities. Right? Financial risk profile is expected to remain comfortable. Now, so as we said, overall, if we start looking at the the company once again, um, please do not think of this as an investment advice. I feel that overall, with the trend towards usage of paper increasing, um, when every one of us are trying to save the environment, are trying to conserve the environment, I feel that companies like Nath Industries will be able to come up with more products, will be able to solve the at least partially make an attempt to solve this problem of usage of polythenes in the industry. Nath Industries being a small cap stock, and then has been in range bound for quite some time, many years so far, is reporting its highest ever revenues. If we continue to see an increase in some of the ratios which we talked about, which were not so good, and if the management continues to work hard towards making the company better and lucrative for shareholders, I feel that Nath Industries can do well. This is my personal opinion. Please do not think of it as any recommendation. I'm not an investment advisor. Please do consult your investment advisor before you make any decision to buy or sell the stock of Nath Industries. Disclaimer from my end is I am invested in this stock, and I am going to hold this for quite some time to see, because I'm sure to I feel that some of these amalgamations which happen when multiple companies are getting merged, it does take a couple of quarters and years to get all of these settled. So till that time, I would wait. I have put a very small amount of capital, probably less than 0.5% of my capital into this stock, and then I'm trying to see which direction does it goes. And so I hope this video was of some help to you and you enjoyed the video. If you did, please do pick that like button, and also do subscribe to the channel, which will definitely be a lot of give a lot of encouragement to me, and I will keep on creating some of these videos. Thank you so much, guys. Looking forward to speaking to you in the next video. Thank you.